Professor Siegel, are you surprised by the scale of the intraday sell-off on this news?
No, because I think that, as I had been saying, most of the rallies that we have seen was optimism on the stimulus package. So clearly, this is a big disappointment. I mean, one side's at 2.4, the other's 1.6. Why couldn't they just say, let's cut it down the middle at 2 and do this? But it's a political calculation. Exactly 4 weeks before the election, there's no doubt about that.
Let's dive in a little bit more into the airline stocks, which, of course, fell significantly on the news of a delayed stimulus bill. They, more than most sectors, were relying on it. Hunter Kay, airline analyst at Wolfe Research, joins us now. How much were they relying on it, Hunter?
Well, they weren't relying on it. They were begging for it, but they furloughed everybody on October 1st. So the horse is out of the barn in terms of furloughs, and they could have rescinded those furloughs and brought them back. But these airlines have already made plans to go forward, and they're not banking on getting furlough money or PSP money extended or more bailout money, we would call it. The market maybe anticipated, but the airlines certainly haven't.
Even if they did get stimulus, Hunter, would that change the view of the airlines? I mean, can you really have a view on these businesses until you know when we're going to get a vaccine or a really effective treatment to keep people out of the hospital?
Yeah, no, that's exactly right. I mean, this is just delaying the inevitable. The airlines would have furloughed people 6 months from now, so it's silly day-to-day stuff. And this is what traders get when you try and make short-term positions based on political wins. It's just not going to work. So. It still may happen. One of your earlier guests talked about unanimous consent in the Senate. I don't see that happening. I think that's off the table. I think Rand Paul alone is probably going to derail the prospects of that. But yeah, at some point, you got to move on. And these airlines have started to plan their businesses in a COVID world, in a post-payroll support program world. And ultimately, this is pain that needs to be taken. If there's any prospects of them doing anything over the next couple of years.
Which is your top pick, Hunter?
It's Copa Airlines. It's a Panamanian airline, about a $2 billion market cap within the United States, focused on a leisure travel company.
Hunter, thanks so much for joining us, weighing in quickly there on the airlines. Back to the broader markets. Michael Yoshikami, does this give you the opportunity to buy into some of... Michael Yoshikami, sorry, not with us. Charlie Babinskoy, which of the cyclical value stocks that have suffered today and of late on these types of headlines would you be topping up on?
Not the airlines, but the auto industry in particular is showing some really good signs. If you go to an auto dealer right now, the lots have nowhere near enough cars to keep up with demand. So the auto suppliers, our favorite being Borg-Warner, which is still trading at a very low price, is something we're very excited about. Snap-on Tools, which sells tools to the auto industry to do repair work. The auto industry is in very solid footing. It's coming back. And again, we think you've got to think about businesses that are going to be fine when we get to the other side of this COVID problem, or businesses that are permanently impacted. And I think business travel is going to be down for the foreseeable future. And so airlines and hotels are not going to be the place to put your money.
Professor Siegel, the fact that the market had such a sharp move today and has been banking so much on increasing prospects of stimulus, does it tell you something about the stimulus-fueled markets, the dependence on stimulus, whether it's from fiscal or monetary authorities? And is that necessarily a healthy thing for investors in the long run?
Well, I mean, in the long run, this will resolve. There's going to be an election. There's going to be a new Congress. And whatever we're going to get, we're going to get it delayed. And it's unfortunate. It will lower growth in the short run. But we also have to remember that we've had some big savings in the last 2 or 3 months. Personal savings has been nearly at record high. So there is reserves that a lot of Americans have. A lot of the people that have been kept on will now go on unemployment insurance, not as high as it was before, but still on unemployment insurance, and get support. So it will be a slowdown. I don't think it's a disaster, certainly. It's a disappointment that they can't get together.
Shepard Smith here. Thanks for watching CNBC on YouTube.